Let's go ahead and kick things off this morning. Risk disclaimer. We have the same risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos, you know the deal. If you're following me out there on social media, this is me. YouTube.com/Chris Pulver. Everything else real Chris Pulver. No underscores, no letters that are misspelled. No numbers. I'm not soliciting. I'm not, direct messaging you for crypto stuff. So please make sure you flag those scammers and get them kicked off social media. If you're following me out there and you message me, I respond. If you follow me on Facebook or on Instagram, Twitter, you can send me direct messages and I will reply. But those are my handles. All right, let's get into the charts. Nice to see everybody. Things are pointing to the upside. We've got some green on the day. E-mini futures up on the S&P. SPY pre-market is up to 380. $2.75 move to the upside. Hopefully we'll continue to see green. And not a bad thing. I've got some notes to review for this morning. Equities on demand class at 10 o'clock. I might have some stocks called away. Those stocks would include, let me double check on Telegram here. So stocks that may be called away. I might be called away on FXI this week. I might be called away on Coinbase this week. I might be called away. Alibaba, I rolled out. FXI, I think I looked at that yesterday and rolled it to next week. Alcoa, I'll keep an eye on that one. That's more of a repair because materials have been down pretty hard. Delta Airlines, if we have a recovery, I'm looking at like a $32 or $33 call on that one with a $30 ownership. And then Kraft Heinz at 37, which is likely going to get called away as well. So it looks like Kraft Heinz, Coinbase, I could make a decent chunk of profit on this week, and that's probably, I don't know, close to $10 a share for the total. $10 credit per contract, which I'm not going to complain about. But anyway, things are looking on the up today. A little bit of recovery. Let's see here. Crypto, I'll take a look at crypto in a second. Futures up on the morning. 0.62 on Dow Jones futures, 0.67 S&P futures, 0.74 on NASDAQ futures. I also think that it is potentially time to start getting involved in some FANG stocks. If you notice, there was the big split on Amazon, and it was this month. So Amazon's not expensive, and we're trading at 112.44 with a pre-market at 113.18. I now have 360 shares of Amazon. Not upset about that. Of course, if Amazon goes up, I will benefit from that. We've got nice support back here. Does Amazon have what it takes to get all the way back to highs? Probably not anytime soon. I still think if you take a look at the NASDAQ, so if you look at QQQ, or you look at the NASDAQ futures, or E-mini futures right here. So I don't necessarily think that the bottom is in on tech. I think we have a little relief rally, but we have lower highs and lower lows. So high to low, lower high to lower low, lower high to lower low. Now we could recover in the interim and we could flush back down. We could be setting up a larger kind of falling wedge, and tech might still stumble a little bit through the summer. I don't expect there to be like tons and tons of crazy awesome volatility. Just saying. June, as we wrap up the month and wrap up the quarter next week, Thursday is the 30th. That's going to be the end of the month, and we kick off July 1. We go into a holiday trading weekend. Typically, like June, July are fairly slow months. August is a fairly slow month in volatility. So I think that, we could see some surprise volatility here and there, but I don't think we're going to see consistent volatility. So what would kind of be nice would be if the selling pressure is kind of taking a back seat. And maybe there's a sneaky little play by the bulls to get a relief rally, kind of continue this deleveraging. And, if tech has a brief recovery, I think that allows some traders and investors to get out of positions that they don't necessarily love. I know I'm doing a bunch of repairs on some stocks that I've been holding for a while. If I can get out for some profit, that'd be great. Maybe we have a sneaky little bull run. But I'm not really convinced that we have bulls taking control until the tops are taken out or until these recent highs are taken out. And we're quite a ways away from that. So let me check on the YouTube channel and say hi to everybody. See what's cracking. All right. Nice turnout today. What's happening, everybody? So, William, good morning. Nice to see you. Sterling's here. Dennis here. Najib is here. Gary, what's up? Joanne, hello. Perry, Don, Chris, Kevin, Daniel. Nice to see you as always. Marilyn in the house. David, Jeremy. All right. Everyone turning up for Friday morning. Love it. Okay, let's talk dollar index. Another one that we've been watching closely. I really, for all of the exposure I have in all my stock positions, options, and forex positions, even cryptos, I have not had a lot of activated chart alarms. So for the most part, prices have been fairly contained this week. I think I may have had. I can look at my phone. I might have had 3 to 5 chart alarms going off. The one that went off this morning was a profit take on the pound Aussie. We hit 7,800. So if anybody was long with me, we were long at 78.12. We were long at 75.12, and we were trying to get an entry down here at 72.12, but didn't fill. So we can cancel the 72.12, but we can take our profit on the 75.12, which is just shy of 300 pips. So that was a nice little win for the week. Let me take a look and see if I've got any closed positions. So I've got a small close up for 63 pips. That was on pound. What was that? What was that this week? I think that was euro dollar 9 FIFO. Yeah, if that was whatever, it's 63 pips, big deal. Let me see how my robots did. Anything on Perfect Storm? My Perfect Storm grabbed 252 pips this week. That's good. And reversion, my little Pockets Pattern Pro reversion robot, grabbed 206 pips this week. So robots grabbed me about 460 pips, and I threw in an extra 60. Sitting on a bunch of positions as well that I'll continue to manage. So obviously not complaining that the robots are picking up my slack or inactivity. I mean, that's one thing that the robots help me do a lot is when I think that there's not a lot of activity, not a lot of trading volatility, those robots tend to surprise me with, doing their work, trading 8, 10, 20 currency pairs, and putting away some nice pips. So that was Pockets Pattern Pro. That's a reversion strategy, and my Perfect Storm. So kind of my tried and true robots that I like to use, and they're doing well. All right. Thanks, Kevin. Good morning, Jan. Denise, nice to see you. What's happening? Yeah, hit that like button for me. Let's get like 99% of everybody. Everyone that's watching, click that thumbs up button for me. Let's saturate that algorithm. And let's take a look at some currencies and stocks. So I'm going to get a little review going on my stock side of things. I'll just start at the top, and I'm just going to take a glance if you'll do me the kindness. So Alcoa trading at 46.95. I'm going to lose a little 20-cent bear call spread just in case we're dropping lower. I was trying to lower my cost by 21 cents. I own the shares of Alcoa, and I own it around 50 bucks. I'm trying to lose Alcoa at $53 for about $3 a share. And if we have a little recovery, that's totally fine. I'll just sit on this one until next week and continue to repair. Let's go BKR. This one there's potentially room to the downside, but I think that this is an energy play. High, low, lower, high, lower, low. I'm looking to see if we have a little jump coming back on energy. Right now, what is happening? A couple things in the bigger picture. China reopening, okay, getting off of COVID lockdowns, China tech, China fiscal and monetary policy. One way to watch it, there's two things you can watch. You can watch the Hang Seng Index, which is ticker HSI, and there is a pretty decent looking cup and handle pattern that hasn't confirmed yet. But if we break this cup line, I think we have a broader recovery coming in China. So that's the broader market there. I also want to look at the Shenzhen Composite, which is it's a weird feed on this one, but I just type in Shenzhen, and the ticker on TradingView is 399001. That's not a phone number. But this thing has been ripping to the upside for the last several weeks. If you go to the weekly time frame, we're now 3 or 4 weeks in a row to the upside. And this turning point is why I started to get long KWeb, FXI, Alibaba, Baidu, Tencent. I mean, anything that's China tech. I also got in some of those online education groups like EDU and TAL. This, to me, is kind of leading the way. All right. So, I mean, this is now, like I said, 4 weeks in a row. And of the last turning point, we have 1, 2, 3, 4, 5, 6, 7 out of 9 weeks in a row positive, and we're making a pretty good comeback. There is still room to get back into this 13,000 area, possibly even back into this previous support around 13,400. So if this continues to rip to the upside, I do expect China to be a pretty good play. This might offer that short-term relief rally in overall sentiment. Maybe this helps sprinkle into U.S. tech a little bit. If you want to follow U.S. tech as a barometer, then watch ARKK. ARK Investments. If you're looking for disruptive technology, look at ARK. We have a really nice equal low around $35, and we've turned off those lows pretty nicely. Now we're opening pre-market 44.71. So a daily time frame on ARK, it does look fairly attractive. Again, I don't think the bottom is permanently in necessarily, but if we have a little relief rally off these lows, one thing I would be looking for is this right here. This is a pretty simple EMA setup, which means exponential moving average. If the candle closes above this 50 EMA, I would be looking for price to continue to gravitate towards this 144 and 200. So, it really is just simple automated trendline behavior with price. We have equal lows. We break this level. We look for a pullback, and we look to make our way up, gravitate towards those outer trend lines. So, could ARK see a nice little recovery towards $55 and $60 in the coming weeks? Possibly. We could have a low volume recovery. We could have a I'm curious. I hold ARK. I'll check my break even, but I'm pretty sure it's right where I have it there, around $75. Let me confirm that on my break even. And ARK going over here. I don't have. Oh, it's in. Hang on, it's in another one. It's in my Interactive Brokers accounts. So ARK, I think that's my $75 break even. So ARK is down to 75.51 break even. So I still have some work to do on ARK. I could probably consider. I'm not going to do it right now. I'm going to see if we, maybe have a reaction off this 50 EMA. If we come back down and retest, then I might consider some long calls. If I did it now, I would be a little bit concerned that we may not have enough momentum into July going into holiday week. I might just be overpaying for a long call that doesn't really go anywhere. So if it's lower volatility, I'm not getting enough movement, then it's not going to be worth it. But I do think that possibly having some more shares or at least doing some credit spread options down here near the lows would be helpful. Okay. What do you have here, Daniel? So Kevin O'Leary's been in Washington pushing for stable coins. He's thinking that in 10 years it could be a 12th sector. Sure. Okay. I mean, look, all the future stuff for crypto. I read a really interesting article. If you'd like to check it out, this is from Andrew Pompliano. It is "Who Will Survive the Everything Bubble," and he wrote it this week. So I'll share that link if you're interested in checking it out. It talks, crypto regulations, where we're at. It was, the NFT craze, the 20,000 coins that were out there that's getting purged. In his opinion, like NFTs and crypto could be 95 to 99% worthless. And this is a Bitcoin maximalist. Okay. He's just saying that there's so much out there that this was the display of euphoria, right? I mean, you know that when we have these bubbles bursting, it's a euphoric sense. And we certainly had that in 2021. After we basically flooded the market with liquidity and money and stimulus in 2020 to kind of buy our way out of a crisis, what we experienced was everything was making money. Everything could do no wrong. And that was euphoria. And it was just a matter of when that top was in, started to happen late 2021. In tech, it was earlier, but there was massive deleveraging started in late 2021, and it's continued this year where we had this massive sell-off, obviously. So anyway, I'll post that article in the YouTube chat if you want to take a look at it. So this is the everything bubble. Check it out. You can also listen to it. I think there's an audio component to it, or you can just read it. Is this? There we go. All right. So ARK, like I said, if you're looking for tech recovery, ARK is a good one. Coinbase. So Coinbase is up to $60.30. Fingers crossed we close above 59 bucks today. If I lose Coinbase, I'll make about $7 a share. And I also have some credit spreads in. It'll be in full profit. I've got a deep in the money bull put spread around 90 bucks. So if we have a decent recovery, that's great. Obviously, I'm watching Bitcoin, which we're trading around 21.2 right now. So we're off the lows nicely. I still don't think that the bottom is necessarily in. Looking at the daily time frame, Bitcoin can definitely eat away at some of these pockets, which is a good thing. I want to see this recovery. I keep talking about this. I don't know if we're going to go straight up to those pockets or if this is such an aggressive flush down that we just do this. We might consolidate a little bit longer, okay? But watch for some consolidation in here and then a breakout coming on the right-hand side of the trend line. I'm trying to make this as technically easy to follow as possible. If price doesn't break this trend line, I'm not getting super bullish. Okay, I'm staying patient, committing to my big round numbers like I have over here. I have been scaling in literally 45, 40, 35, 30, 25, 20. I've scaled into Bitcoin the entire time. Okay, I've scaled into Ethereum all the way down to $1,000. If you're subscribing to my Pulver Report newsletter, Bitcoin and Ethereum are the ones that I continue to echo. Those are the only two coins I'm really focused on right now. To me, that's also a network play, that's a blockchain play, that's a Web 3.0 play. So if there's, 90+% of these coins just disappear, if, more stable coins fail, Luna, I mean, if you have horrible stories and Celsius and some of those other holding yield farming situations fail, I still think that Bitcoin, Ethereum could be the cream of the crop, at least to hold for the longer term. So that's my style. I'm not actively, jumping in and trying to flip coins or try to trade them that actively. I'm just trying to invest them and hold at good levels. So, but that's that. Okay. Thanks, Donna. But anyway, Coinbase. If we stay above $59, that's my covered call for this week. And I know that we've talked about this a lot in equities on demand. I could roll it out the next week and be like, hey, sure, let me roll it out there and probably get another $1.50 off my cost, which is worth it. Okay, but I also want to make sure that if I could make $7 a share plus free up about I'm trying to think about $6,000 or $7,000 worth of margin. That's good because I do have a very busy July 15th coming. We looked at those yesterday in equities on demand. We have 20 expirations on July 15th, so that's a lot. That's going to be quite the week to manage, and these are mostly credit spreads. Maybe a couple other long calls, but let me confirm that. So 7/15 expiration. So I have 21, and a lot of them are credit spreads. So hopefully we're in profit on some of these. Hopefully we're profit on most of them, but we'll keep an eye on things. But that is a lot to be managing. Again, worst case scenarios, we can push some of them. We can talk about repairing some of them, maybe push them into August, September. I, at this point, kind of opt for September, October even, just to kind of get through summer trading. I mean, I don't expect there to be a lot of volatility in the summer trading months, which is now. Like right now, even if we have some surprise volatility going into the end of Q2 next week, July is usually like one of the slowest months. August is a very slow month, and then August is kind of this weird, strange summer transition. Mid-August, end of August, things starts to creep out. We usually see tops and bottoms in August, or we see some really, really nice breakouts if there's been consolidation. All right, so that's what I'm checking out there for stocks and options. Let's take a look at our currencies. I reviewed all my positions this week in Flex. I still like a lot of the trades I'm in. Aussie CAD I'm bullish on. If you're just looking for direction, here's what I have. I'll just read off my. Let me take a look here. So all the positions that I'm currently in, I have quite a few open trades. Okay, so I'm in Aussie CAD long, Aussie Swiss long, Aussie Yen long, CAD Swiss long, Swiss Yen short, Euro Swiss long, Euro Yen long. Those are hedges, by the way. Aussie Yen, Euro Yen are long. I talked about that this week in Flex. Euro Dollar long, Pound CAD long, Pound Swiss long, Pound Dollar long, New Zealand CAD long, New Zealand Dollar long, Dollar Yen short, and Dollar Swiss long. Oh, Dollar Swiss, what up, dude? Dollar Swiss got filled on a pullback, so we got filled at this equal low. Excelente. This low on Dollar Swiss, trade one. The other ones are down here, spaced out by a couple hundred pips, and we have a really nice pocket back up here towards the highs at 99 or 1.00. So, I actually am kind of happy with this trade because from this equal high, we might come down into channel lows. So be it. And then we pop back up here to the pocket. We'll also be watching the Euro Swiss. Maybe there's some timing to see how this Dollar Swiss behaves. If Dollar Swiss comes back down to some automated trend lines, find some channel support. We also have past resistance becoming support around 94.50. So if we bounce here, looking for price to head back up, find this pocket, find this high. This also could be a really nice positive rollover trade. Dollar Swiss, right? We're sitting at 1.5 or 1.75 for the US. Let me check cbrates.com. cbrates.com. Switzerland, they decreased their negative interest rate from negative 0.75 to negative 0.25. And the US is sitting at 1.5 to 1.75. So there's still a pretty solid differential. And then in July, it's the end of July, but the Fed is likely going to raise rates another 50 to 75 basis points, which puts the Fed official cash rate over 2%. So brokers should finally be offering some positive rollover, and Dollar Swiss would be a good one to be long on. Just saying. And other central banks will probably continue to raise rates as well until inflation is dropping. Now, on the note of inflation, one thing that has been happening this week, we have seen a pretty dramatic move. So oil, down. Materials, down. Commodities, down. Okay, to me, this is the inflation fix move. Okay, this means so we've heard the phrase peak inflation, right? We probably heard the phrase thrown around in the news. Peak inflation means this is what the market is looking for. The market is looking for inflation data to be the worst of it is in the past. If the market can wrap its head around inflation and the worst of it being behind us, this is where I think the overall market can start showing that there's light at the end of the tunnel. There is some optimism coming forward. We're at the third worst start in the history of the S&P 500 this year. Now it's deserving considering we're at all-time highs and we've completely engineered several recoveries out of crisis mode from 2008 and 2020. But when we're noticing oil down, copper down, aluminum down, steel down, commodities in general, soybeans, coffee, sugar, oil, right? I said oil, but commodities. When everything is pushing lower, materials are lower. This is the inflation data that's going to help bring things back in line. We've also had enough higher prices that it's starting to cool off consumer buying. Okay, I saw that was it the PMI numbers, the manufacturing numbers were down a little bit softer. They're not below 50, but they are decreasing. So again, if the inflation, if these things are showing prices moving downward, I think that's at least the closer evidence that inflation data is looking better. I don't think it's fixed. I don't think it's going anywhere. I think we're still going to have elevated inflation, but certainly from 8-9% inflation, we could see a dramatic drop. It could be 5% inflation, which is still a problem, but certainly better than 8-9%. Certainly better than energy prices being 40 to 50% higher. So I think that's what we really noticed this week, and that's also led by I'm watching the Shenzhen Composite or the Shenzhen Index. Watching to see is it China Tech that's leading the way? Is China Tech dripping over into U.S. equities? Kind of seems that way. So here's U.S. oil. Okay, oil's at 106. Now I said this week in my trading rooms, are we looking at oil as this? Since we broke below the 50 EMA, are we looking to have this high hold and we broke below the 50, we pull back, and then we fall back down for a correction into these lows? I think that this automated trendline support is still available between $195. I think we can find that, and then oil is a big range opportunity right here. I still think energy prices remain resilient. I'm not saying elevated. I'm not saying crisis levels, right? I'm not saying we're breaking 130. But I do think that oil is going to remain well supported around $100. And the reason why is the demand is still extremely high, right? It's still summer. Even though the volatility and volume may be down, people are still traveling. People are still driving. Flights are still, flights are getting canceled left and right, which is really, it's not because there's not people wanting to fly. It's because there's no pilots and flight attendants to staff, which is kind of sad. But people want to travel. So demand is still there, right? So if demand is still there, I don't see oil dropping too much lower. If it surprises us to the downside, I go back to what I just talked about, the inflation fix. I think that's really where the data points like, hey, look, all these things that have been crazy high and elevated that's been weighting, WEIGHT, like weighting the inflation data higher, that can finally start to give a little relief. And what I love is you have like core inflation, headline inflation are always very different, but they try to not weight food and energy prices. Of course, like the worst things that we have as consumers is food and energy prices, and the Fed's like, yeah, we're not going to consider that with inflation. Don't worry about it. Makes perfect sense. Okay. Anyway, so watching oil closely, but it has been down. We've dropped over 20% from this high. So oil has dropped as far as 18% from high to low. So currently it's sitting around 14, almost 15% off the highs. So that's a pretty substantial correction. There's still some room to the downside to find some automated trendline support and equal lows back here in March and April around $96. Right? I'm looking at some steel stocks. CLF, we're off the lows. We have some overextended conditions. I do have some credit spreads running out to July. I don't mind owning more CLF and X. These are steel plays. FCX is Freeport McMoran. Off the lows, but again, I'm trying to think where I own this. I'm trying to think. Broker assigned. Where did I have to check my break even on this one. So FCX, where do I own it? FCX. FCX, you own it. Fudge, I need to figure out where I own it. I should have been assigned somewhere in here. So 40. Oh wait, never mind. I know what I did. So we did this in class. This was an assignment by the broker, and I did the math, and I ended up even though this was down because I was in a credit spread, I had a long put running. So I decided to not fight this one and take ownership. Although I feel like we could bounce in the near term, I decided just to eat the 48 cents loss. So another reason, I'll just throw it out there. If you don't know how to trade options, look, this stock dropped from $44 to $30. You put that in a percentage basis, this stock literally dropped from here to here. That was a 35% drop. Okay, so if you had $1,000, it's now worth $650. That's a substantial drop. If you had $100,000, $10,000, it's now worth $6,500. That's a big drop. Okay, I ended up losing 48 cents. So for me, let's say I had $10,000. If I had $10,000, 48-cent loss is $48. So rather than watching a 34% move in the position, I lost less than half of 1%. Thanks options, right? Thanks to options, we can do stuff like that. So I decided to take the loss in this one, and it wasn't worth repairing, wasn't worth fighting. I've got other stocks I'm looking to get rid of and turn some profit. But anyway, I just want to see where we're at because this is also a play that, in the bigger picture, I think there's certainly room to get excited about buying this lower. And if this continues to drop hard, then great. We'll pick this up in the in the teens. But I could also see this being kind of supported in here in the interim. There's just a lot of stuff. It's like I've had a lot of material plays, a lot of inflation friendly plays. But if inflation is not really the play, and we're going into a tech recovery, going into a growth move, even in the next 1 to 3 months, materials will drop fast because they were so overvalued and so overpushed that they'll drop fast. So right now I'm looking to kind of reposition. China tech is a big part of that. Okay, recovery in the U.S. stocks, part of that. Defensive, consumer defensive. We have some good plays like Colgate this week. This is one that might be a surprise for me, but I'm actually really excited about this one. We're trading at 78.88. We're going to open in 2 minutes here on CL. I put in a covered call for this week because it was not called away last week, which was good for me. I put in a $78 covered call. So if Colgate stays above $78 by the end of today, I'm going to make around $7 a share on my position. So between Colgate, I'm going to actually add that into that. Let me add this in here. So Colgate, Coinbase, Alibaba, FXI, Alcoa, Delta, KHC. Of those, Kraft Heinz. So Colgate, I hopefully lose the stock today. Coinbase, if it stays above 60 bucks, I'll hopefully $59 actually. I'll hopefully lose the stock today. KHC, if it stays above $37, I don't think. Oh, I did roll this. I rolled this for like 40 cents this week, so that's for next week on KHC. Delta Airlines. I think airlines are still under some pressure. I have a $33 or a $31.50 covered call, so I'll just add that next week and continue to repair Delta, hopefully for a couple bucks a share. So anyway, this is what I'm trying to do. I'm trying to get some stocks called away for profit, even if it's $2 to $3 to $5 a share. I'll take it. I'll take the cash. I'll take the profit. I'll take the margin, and I'll just continue to grind. Okay, ARKK. I think is that what you mean? ARKK, not AAKK. I'm not sure what that is. ARK is looking pretty good. Like I said earlier, I want to get long on ARK as a little short-term rally. But what I'm watching here is this. As long as ARK can close above this 50 EMA, I think there's room to the upside. I just don't know how much more volatility we're going to get. If we have a recovery, I think it's going to be a low volume recovery. Meaning, and that's not a bad thing because prices can still go up. But we might see thinner volume because the sellers are taking a breather. Sellers might come back in a big way in September, and maybe the sellers just step away. Maybe there's enough time this summer to wrap up Q2, and Q3 is looking for a bit of recovery. July, August, the market's like, hey, look, is this inflation stuff really behind us? If so, can we start pricing in, this is what the Fed's going to do. This is what other central banks are doing. Here's where the opportunities are for the next 5 months. Because that's what the market tends to do. I mean, like I said, third worst start in the S&P history, but the market tends to show that it's willing to fight back, right? So 6 months of crap, the market's willing to fight back. Even if we have a bad Q2 GDP reading and it's a contraction, we're technically in a recession. Okay, recessions don't mean that stocks have to go lower. I'm not sure if you realize that. Like the last 11 recessions we've had, I think 6 times the stock market's actually finished higher. So we've already had beat up stocks. And I'm not saying that the bottom is in, but we've had beat up enough stocks that perhaps we at least see a little fight. So being down 20+% in the S&P, being down 30+% in the Nasdaq, even if we just fight back halfway, at least show that the market's willing to do something versus just bleed itself out. Okay, all right, I'm going to move on to some currency pairs. Aussie Canadian, I'm long. Aussie Swiss, I'm long. I'm watching for some pocket trades on some of these Swiss pairs. Aussie Swiss have been dropping hard, but it's okay. To me, this is okay. I'm going to hold here. We've got some structure. I'm just going to wait to buy some more at a lower price. There's also a pivot right here. Rally continues on CL. That's a good thing. And I just noticed here. Let's see. I noticed that my headset is now like one ear only. Everything sounds good on your end, right? Hopefully. So CL is good to the upside. Aussie Swiss, I'm going to buy some more at a lower price, like 64 or lower. Let me check the currency strength chart today. So, you freaking turd. Swiss franc is the strongest. That makes me sad. That's really annoying. So, Denise, thanks for giving me that reverse currency war article. That was interesting to hear the comments from the S&B. I don't know how much stronger they want their currency, to be honest. It's like, what are they trying to do? What is the Swiss trying to do? I have no idea. From a timing standpoint, from a technical standpoint, I think that there is some strong level of support right here at 1.00. This is Euro Swiss. So if we bounce hard in Euro Swiss, I told traders this week in the flex room, I'm looking to take it all the way back to this pocket, target 1. I'm looking to get back to the highs at 105. And I would really like to see if for this historical significance, if this could be a double bottom. Because if this is a double bottom and we hold these lows and we go all the way back here to 105, once we break, or if we break 105, then we double that move and we should be looking at 110, right? If we go from 1.00 to 105, that's a 500 pip move. You would double that and go from 105 to 110. That would fulfill a double bottom trade. So there could be some massive potential on this Euro Swiss, and I don't know what the main objective is for the Swiss National Bank to be like, yeah, we're going to reduce our negative interest rate. We're not going to intervene. We're not going to manipulate. But I have no idea like why they want to see such a strong currency pair outside of their inflation's not bad. And then you have Japan doing the complete opposite. Japan's like doing old school anti-inflation by printing money like crazy and buying government bonds. So it's two polar opposite approaches to keep inflation down. So it's interesting that that's how it's being handled, right? Swiss National Bank has a super strong currency pair to tame inflation. The Bank of Japan is weakening the crap out of the currency to keep inflation low. So who's right? I mean, so we talk about like what toolkit do these central banks have? Apparently they can do whatever they want. They can go do nothing on their interest rates or appreciate their currency or depreciate the currency, and both are supposed to be fixing the problem of inflation. It's kind of weird. So anyway, I don't know what the Swiss has planned for us. I think the Euro Swiss is a big part of that. To me, I'm looking at a double bottom potentially and support at major historical lows at 1.00. Okay. Yeah, the Swiss wants to hold it. Yeah, they might. Or they want to just see the world take a carry trade, which I'm okay with too. It's like, you know what? If I've got to hold dollar Swiss long and make positive rollover on it, or Aussie Swiss, CAD Swiss, Pound Swiss, I guess I will. I mean, it's not ideal. I'd rather make pips and just get this trade over with. But it's not going to change my plan. I mean, if you were to look at this chart objectively, and that's the challenge, look at this chart objectively on the monthly time frame. What would you be doing as an investor if this is a chart you were given? Okay, and the theory is really simple. You sell high, you buy low. What would you do? I'm looking to buy low. And we've literally been in this range, sub 110. We're now down to 1.01. We have flash crash levels and intervention levels around that parity mark. So, I mean, we'll find out what happens. But I again, like the day that I close my Euro Swiss, it'll be worth celebrating for me and everybody in Flex that's taking the trade with me. Okay. Let's see here. Commentary that the Swiss is doing it in solidarity with the UK, whose central bank. So central bank is raising rates, right? Bank of England raising rates. I mean, they are. I also put it. I mean, this is another one. It's pound Swiss. Okay, so if I'm a buyer, I'm pretty interested in buying pound Swiss. So where does it get picked up? Well, hopefully this is. I mean, the bigger picture. If this is a beautiful longer term head and shoulders, and this thing starts to run, I think pound Swiss has a lot of potential to get to 140. It's just going to take time, And I guess I got the time to do it. I'm not going anywhere, but some of this forex investing stuff is kind of time consuming. It's kind of frustrating. So, anywho, that's that. All right. Speaking of, dare I look at the pound Swiss 140, 139? We're up to some fresh highs, I believe, today, which is super aggravating. I think we are. We're retesting highs. Pound Swiss is back up towards fresh highs. Not above them, but I've got some scaling levels at 142.50, 145, 147. Ugh. Hopefully that doesn't come back to bite me in the butt. But I'll be watching Euro Swiss for that potential step in around 1.00. I really don't think it's a difficult trade. If we find this low and we bounce hard, I think we come back up to this pocket at 103.50. If we pull back here, we head up to 105. That right there is worth profit protection. That's 100 plus pips in my net position. I still want to participate in a double bottom if it's going to be a big move to the upside. If we establish this, annual low, multi-year low, believe me, I would be super happy to see the Euro Swiss on a mission to go to 110. But time will tell. UK central bank has declared they're going into recession, so Swiss will not penalize UK for moving funds here. Oh, interesting. Okay. Well, at least the UK is honest. What are we doing? We're like, it's like taboo to say the word recession from the Fed. They said that it's not here, right? It's not certainly here, but guess what? If we have a GDP contraction for Q2, we technically have a recession. So you remember that inverted yield curve back in April? Remember the 6 to 16 month window with the recession of inverted yield curves? Remember it's been talked about for the last 2 years? Yeah, I mean, we could have a recession. So if we could just admit it, doesn't mean that the stock market has to go any lower. There's still recovery out there because we could have like this tiny contraction. We could have real and nominal GDP that's still productive. We could grow by 4%, 4%, and then have a, negative 0.5, negative 1, and still be positive GDP net growth, but have a technical recession. So anyway, we will see. Yeah, at least the UK is honest. Exactly. All right. Anything else? I've just been doing a lot of talking. So I do have some positions to review. It's going to be a busy session in equities on demand. It should be a good session, though. We have some stocks that could be called away this week or next week on Friday, which is I'm going to be happy with. These are a lot of positions that I have in Forex that I'll be monitoring. I'm going to have to update my notes because this is now a couple weeks old. I've just been updating and going because I have a lot of positions I'm monitoring. And we have a busy July coming in. Trading-wise next week, make sure you come back and join me Monday and Friday, 9 o'clock Eastern Time. 27th and 1st, we're going to end the month. We're going to end Q2, and we're going to kick off a holiday weekend. So expect, like I said, trading volume, volatility to probably be quiet for the next maybe 3-4 weeks. Doesn't mean there's not good opportunities to trade. We're still looking to find trade opportunities. I still like positions I'm in. When I talked through trades yesterday in Flex, I like my Aussie CAD long. I really like pound CAD long. I really like pound dollar long. Pound Swiss and Euro Swiss, if they turn, I think they could turn really aggressively. But pound dollar and pound CAD, if we get a pushback up to these equal highs around 62, I'm gonna make a nice chunk of profit there. Pound US dollar, we break above these recent highs or get back to 2600, between 2680 and this pocket level around 29 to 3000. I think we could at least have a run where we go low to high, higher low to higher high, challenge this level, find this pocket, and then sure, the pound Swiss or the pound dollar can sell back off. Okay, otherwise it's down here, down here, down here. Look for a falling wedge, look for more divergence, and then it's a buy trade coming later. It's like the directions I'm in right now, I actually like quite a bit. It's just, is the market going to move in my favor or is it not? Do I need to see an August transition month with a top or bottom and then we get the move that I want? So I might have to wait for a couple more months to really get my position trades to pay out. Okay, fine. Or it's if we have a slide next week on the dollar, okay, we'll find out. So always monitoring, always watching, always trying to get better. All right. Other than that, happy Friday. We are up on the day, so E-mini futures up, nice and green. I'm loving that. S&P SPY open higher with a gap. Hopefully, it's you have to remember the saying: amateurs open, pros close. Okay, amateurs open, so we have a gap higher, and the bulls are in control this morning. Pros close. If it stays bullish on the day, check this out. I looked at this yesterday. Look at this on the 4-hour time frame. Okay, if we look at the E-mini futures feed, if we close above this high, if we close above that high, we have a gap higher, we have a pocket right here, we have a pocket right here with that kind of capitulation sell-off. So there is decent upside potential on the index to continue this rally. Now, it doesn't mean that we're changing the course and it's full on bulls in control, because we have not taken out this high, we have not taken out this high. So we could still have a rally coming, and that move could still be faded all the way back down. Could be. But in order for that fade to happen, in order for the bears to take back over, we're going to have to see that inflation is still high. The Fed's raising rates more than what the market wants. Recession concerns, blah, blah, blah. All this negative stuff that we've already been dealing with, right? So how much worse can it get? I don't know. Maybe Russia-Ukraine escalates into something new. Maybe China's like, yeah, let's go after Taiwan, which I don't think that's going to happen right now, because China is very much interested in their fiscal monetary policy getting tech to recover. And they are. That's what that Shenzhen Composite is all about. Okay. But I think there's room for this to push higher. So we're at 38.40 right now. If we close today above 38.40, I'd love to see the market up here into some fresh highs, chewing away some of these pockets and gaps. And then next week, we'll see what this bull market's made of. I should say this recovery. Because if we take out this high, now we're having a real conversation about a potential trend break. Okay. But I think there's room for the S&P to continue to gain, at least recovering a little bit. And that is a good thing, because all the stocks that we have lowered our cost on, we could be looking at repairing them. We could be looking at covered calls to get them called away for profit. And that would be excellent, because a lot of our break-evens are not that far away. Okay. How much of your trading is determined by order flow? Not much of it at all, actually. I mean, when I see this, when I see something like this, I could stare at order flow and volume all day. All I know is that at some point that's going to get filled. So if I'm staring at order flow, that's like I don't do anything until my order flow and volume is a certain level. To me, that's a bit of a lagging way to trade. Because if the order flow and the volume's coming in and I'm trying to jump on top of that, like that's fine, but that's like doing nothing, and then like jumping in with the crowd. I tend to be early. I tend to be trading small, trading early, and so when the volume does come in, that volume is able to get me to where I want to be, as opposed to chasing and jumping in with everyone else. Now, granted, that confirmation makes your trading a lot easier and probably a little bit less stressful. But if I'm even remotely right on direction, and I'm in a little bit here, and I'm in a little bit here, and I'm looking for some price patterns, I could be in waiting for the move, and then when the big volume comes in, I'm already in profit. So it doesn't really, affect how I trade. It's just I'm looking for big pockets to get filled, because those are the big market inefficiencies. Make sense? So that was E-mini crossing above this chart alarm, gaps and pockets up here as well, and that's what I'm watching. So 4,000 pocket filled, and I'll set that chart alarm as well. Any requests, any questions for me? I'll start wrapping things up. I got class in 15 minutes for equities on demand. We'll go through our notes today. There shouldn't be a ton that we have to do. We have some credit spreads that will be positive. We have some covered calls we'll be watching. We rolled a couple out to next week, but there's some stocks we should be getting called away on today. Okay. But overall, things are looking more promising today. It's a good Friday. I think, I hope, and enjoy the weekend. All right, come back and join me next week, Monday and Friday, 9 a.m. Eastern time, and come right back to the same place, youtube.com/Chris Pulver, or follow me out there on social media. Make sure it's the real me. Cool beans? All right, buddy, one last time. Look at that. We had 50, 60 people watching, 40 thumbs up. Thank you so much. If you didn't have a chance to do it, hit that like button for me, and come back and join me next week. By the way, where are we at subscriber-wise? We got to be close. Oh, man, we're at 4.99. We're almost at 5,000 subscribers. Now, considering it was 0 last year, I'm pretty happy with that, and this is all I'm doing. Live market, doesn't matter what asset class, free education, good stuff. So we'll crack that 5,000 mark. Maybe we can have a little celebration next week. All right, buddy. Thanks a lot. Have a good weekend. Happy Friday, and see you soon. Bye.